lots of traders know market structure, lots of traders know supply and demand, but most traders still lose money because they don't know how to combine both correctly. In this video, I'll show you how to use market structure for direction and supply and demand for entries. So let's go straight into the chart. Before we get into the chart, let's do a quick recap on market structure, right? So remember in our previous video, we said market structure is built using swing lows and swing highs, right? So firstly, we'll mark out our swing low and our swing high. So you can see price retraced, then move back to the upside and broke above the previous high, giving us a break obstruction, which is an indication of bullish strength, right? So this is a sign that we are bullish. Okay. And now our new swing points are this low, the lowest point of price, and this high, the highest point of price before retracing to the downside, right? So as you can see, price retraced, boom, price broke above the previous high, giving us another break obstruction. And now we've gotten a clear confirmation that we are in a bullish trend, right? So in a bullish trend, we expect price to take out our swing highs, while in a bearish trend, we expect price to take out our swing lows, right? As you can see, price puts in this low, broke above the previous high, so giving us another confirmation that we are still bullish, right? Okay, good. Now we're still bullish. Now I want you to pay attention to what happened here. Immediately price puts in the swing high, price retraced to the downside and break below the previous low, which is our swing low. Remember we said in the bullish trend, our swing low is supposed to be protected while our swing high is supposed to be targeted. While in a bearish trend, our swing low is supposed to be targeted while our swing high is supposed to be protected, right? So as you can see here, price broke below this low, which is an indication of bearish strength, right? A change of character, a shift in market trend, or a shift in character, whichever way you prefer. So this is a clear indication that price is about to move to the opposite direction. We're bullish, and now price is about to switch from bullish to bearish, right? So price puts in this low. As you can see, price retraced to the upside, then now broke and closed below the previous low, which is another confirmation of bearish continuation. So now we have a clear confirmation that we are in a bearish trend. Okay, so remember we also said in a bearish trend, we look for sell opportunity, right? When we are bearish, we look for sell opportunities, and while we are bullish, we look for buy opportunities, right? Price retraced, broke to the downside again. Okay, so that being said, now let's get to supply and demand. Remember, we also talked about supply and demand, right? We said supply is a zone where it's an area in the market where sellers are much and price is expected to react from that zone, right? And we say while marking out our supply and our demand zone, we make use of the last candle that caused the impulsive movement, right? In a bullish price leg, we mark out our demand zone and expect price to react from those zones. Just for instance, let's say this is our price leg, this is our swing high, and this is our swing low down here. Let me mark this out. This is our swing low. Okay, so what I'm saying is that we mark out our demand zone, which is the last candle before the impulsive move. Let's say this is our demand zone. They will wait for price to tap into our zone. They will take a trade from the demand zone to target, right? To target our swing high. Okay, because we've already said in a bullish trend, we expect price to take out our swing high, while in a bearish trend, we expect price to take out our swing low, right? So in a bearish scenario, if price is bearish, all we'll do is mark out our supply zone. And remember, we said a supply zone is an area in price where the sellers are much and price is expected to react from that zone, right? And we can mark out our supply zone by using the last candle that caused the impulsive movement. It can either be bullish or bearish. It does not matter. They both work, right? So let's assume this is our supply zone. So what we'll do here is we get into a sell trade and ride price, get into a sell trade from this zone and ride price to the swing low, okay? Because we're bearish and price is expected to take out the swing low in a bearish trend, right? Okay, that being said, let's get into the chart and see how it really looks like, okay? Firstly, we have to identify our trend, right? As you can see here, price is breaking structure to the upside. You can see price breaking structures to the upside, price breaking structure to the upside. So that's a clear indication that we are bullish. So what you have to do is to pay attention to the most recent structure, which is this particular structure here. Because price put in this low and this low put in this high, right? So that structure will pay attention to. There's no need to waste your time in going back and start marking structures from a week or days ago. There's no need for that, right? You can just mark out the most recent structure and you get your directional bias from that. Okay, so you can see price broke structure to the upside, so making this our swing low, and price broke below our swing low. So we have a change of character here, which is a clear indication of a shift of trend. Okay, we have a change of character here. Let me zoom in so get a clearer view. Okay, much better. I had a change of character here, and this is now our new trading range. Let's mark out our new trading range. I will change of character to the downside. So this is our swing low. This is our swing low, while this is our swing high. Right? This is our swing high, the highest point of price. Remember we said in a bearish trend, we expect price to take out our swing low and price to protect our swing high. So all we have to do right now is just to mark out our supply zone. Say we can use the last candle before, make use of the last candle before the massive impulsive movement or before the impulsive movement. So you can see this candle here, this supply zone has already been mitigated. This zone has already mitigated, or this would have been a valid supply zone, but as you can see, this bullish candle here has not been mitigated, so we can mark that out. And we have another supply zone here, this particular one here, but it has already been mitigated. So let's make use of the other one. There's another one here, but seems like price has already mitigated this one also. This particular one here has already been mitigated. This particular one here has already been mitigated here. But we have a very, I think, yeah, we have a very clean one here. This particular buy to sell candle has not been mitigated. This particular bullish candle here has not been mitigated. But I'll prefer to use this entire range, this last candle before the move to the down. Like I said, they both work. You can use the last candle, or you can use the last bullish candle for the impulsive movement to the downside while marking out your supply, or for a demand, you can use the last bearish candle before the impulsive movement to the upside, or the last candle. They all work, right? So what will happen is that we'll mark out our supply zone. We can actually wait for price to come and tap this zone before getting into a trade, or you can get into a sell order, right? Let's play price and see what price did good. Price has got into our zones. What happened now? We get into a sell trade, put our stop above the high. Our take profit would be our swing low, right? Because we said in a bearish trend, we expect price to take out our swing low and protect our swing high, right? So we're bearish, and let's play price and see. Boom. Price has smashed our TP. Okay, TP has been hit, and now we'll continue to ride price. Since we're bearish, we'll look for more sell opportunities, right? So now this is a breakout structure. Let's mark this out. This becomes a breakout structure. Now mark out our new swing low. So I'll take this off the chart because I believe price would not go back there. If price should do that, that means we are switching from a bearish mood, a bearish trend to a bullish trend. Okay, so these are swing high. This becomes our swing high. Okay, I'll put that here. This becomes our swing high, right? Because this is the highest points that price got to before breaking structure to the downside. Yeah, as we can see, price put in this low, retrace, broke higher, then boom, broke below. So this is the highest point of price, right? Sorry. Okay, so now we'll look for our supply zone and continue riding price to the downside, right? This is our swing low. Remember, our swing low is supposed to be targeted while our swing high is supposed to be protected. So we'll look for the supply zone and ride price to the downside. Okay, we'll have this beautiful zone here, this buy to sell candle here. We can also use this bearish candle, last bearish candle, whichever you prefer. So okay, let's go with the last bearish candle now. Almost time price will not go that high to indicate your supply zone. Most of the price might just react from the last candle, right? So your stops are above the high, put your stop loss above the swing high, because the price should break above this swing high is a clear indication that we're no longer bearish. Price is about to move to the opposite direction, right? Let's play price and see what happened. Boom. Price, pay attention to what happened here. Price tagged us out. So now price has broken structure to the upside, but if you notice, price did not break and close. Price just liquidated the high, right? Price did not break and close above our swing high. Price took out the swing high, liquidated the high, and returned back. So we're still bearish. Remember, not until price break and close above our zone, we do not have a clear change of structure, right? So this becomes our swing high because this is the highest point of price. Price did not break below, price did not break above, so this becomes our swing high. And let's see what happened. Okay, good. Now we have a break of structure. Just like I said, if price does not break and close above the swing high, it is not a clear confirmation of change of character, right? So we're still bearish. We had a break of structure to the downside. Now our new trading range is this swing high and this swing low, right? So what we'll do right now is look for supply zones and mark out our supply zone and get into a trade, right price to the swing low. Okay, so you can see here we have this beautiful supply zone. So let's play price and see what happens. Good. Price, let's go into our zone, let's get into a trade. Stops above the high. You can actually put your stop above your swing high just to be safe. Then you'll take profits at your swing low. Let's play price and see what happens. Good. Take profit has also been hit. So all you just do is just to continue riding price to the downside since we're in a bearish trend, right? Now our new swing high is this. This is our new swing high. Is the highest point price got to after breaking the structure. Price putting this high, then broke below. So this is our new swing high. Why our new swing low? This is our new swing low. Okay, now we don't have a swing low yet. Let's see where price starts retracing. Okay, so had a break of structure and price melted down. Okay, let's zoom out and see. We don't have a swing low yet. Once the price starts retracing to the upside, boom. Okay, now we have a swing low. So these are new swing low. Now if you notice, our trading range has become a bit bigger. So let's mark out our supply zone. We have one beautiful supply zone here. There's one here. We have another one here. So whichever zone price reacts from, we get into a trade. Okay. Okay. Price has tapped into this zone. So what we'll do is just set in our market execution, get into a trade, get into a sell trade, targets the swing low. If price is supposed to continue bearish, if price is still bearish, price is supposed to continue taking out the swing lows, right? So just follow the trend, don't trade against the trend. So you can see, boom, price broke to the downside, right? Just imagine how many trades that has actually hit your take profit, right? 2 beautiful trades. So all you have to do is follow the trend of the markets. Never trade against the trend. The trend is your friend. Remember, in a bullish market, look for buy opportunities. In a bearish market, look for sell opportunities, right? If you understand this process, trading becomes much easier and clearer for you. Okay, you no longer be guess trading, you no longer be chasing price. Okay, in the next video I'll explain entry confirmation and risk management for beginners, right? If this video was helpful, like the video, subscribe, follow TeeFX Academy for more educational content.